Welcome to the Art of Money podcast with Art McPherson.
And thanks for checking out the Art of Money podcast. My name is Mark Owens alongside Art McPherson and Luke McCarty. All the information for the McPherson Financial Group, you can find it at theartofmoneyradio.com. All right, let's talk a little taxes because so far this fiscal year, our federal government has collected more than $3.5 trillion in taxes. Now, that sounds impressive. However, Luke McCarty, guess how much the government has spent in that same period? And I know you know the answer.
Oh, I'm going to go with double.
$6 trillion. One reason congressional Democrats are trying to push through trillions of dollars of new tax increases. And I want you to hear this clip from Fox Business, who asked Doug Holtz-Eakin, former director of the Congressional Budget Office, if he thinks that they'll be successful getting these tax hikes through.
I do. I think in the end, we are going to see a reconciliation bill. It's almost inconceivable that a newly elected president wouldn't get some part of his campaign platform enacted into law. So Democrats will ultimately coalesce around some version of tax hikes. They may not get the $3.5 trillion or $6 trillion or whatever number they prefer, but they'll get something, and they will get their centerpiece of raising individual taxes, raising the corporate tax rate.
All right, so Luke McCarty, I guess now is a great time to start talking about some kind of tax strategy because they're about to be on the rise.
They are about to be on the rise. So if you listened to our show last week, it was 2 weeks ago, the Democrats came out with their new tax bill. Of course, it hasn't been passed, but it's being talked about. So, yeah, capital gains tax may go from 20% high to 25%, right? Your top tax bracket is going from 37 to 39. But the income limit for that top tax bracket, right, used to be about $618,000 if you're married. Now it drops to $450,000. What's concerning about this is it penalizes you for being married. So I don't know if you guys caught this. I don't know if you read the 628 pages.
No, I got about 250 pages in and just couldn't keep my interest. I tried.
Yeah, I skimmed it. But what it says is the top tax bracket for married filing jointly is proposed to be $450,000. However, you would think being single, it would be half of that, right?
Right.
It's not. It's $400,000 if you're single. So Biden's little campaign promise to not raise anybody's taxes making less than $400,000 is actually going to penalize less than 1%, probably 1 or 2% of the population. But to say that you're married and you can only make $50,000 more in the same tax bracket than if you're single, that's not good policy, in my opinion. It should be half. Like currently right now, the brackets are pretty much, if you make this by yourself, you get this deduction. This is your tax bracket. You make this married, you get 2 deductions. Here's your tax bracket.
Right.
But what would you do, Mr. Owens, if you and your wife made $450,000 and we're in the 39% tax bracket, or you could not be married and be in the 25% tax bracket?
But I like being married.
I know.
I just don't want to pay more in taxes.
I know. I am not recommending anybody get a divorce over paying taxes. I'm just saying that's one of the bigger flaws that I saw in this new bill is it's kind of penalizing us who are married. Not a good look because I'm married, you're married. So.
Right. So, okay. So what are some steps that we can take if we call the McPherson Financial Group and say, let's put a strategy together? Tell me some of the steps that we're going to take.
The amount of money you make depends on how you should save your money. It also depends on which bucket of money you should spend from, right? If you're in the top tax bracket, a Roth IRA, Roth 401k, Roth conversion may not make sense. If you're in the 24% and under, it makes a lot of sense, especially when rates go up. So you need to just have that plan, have somebody who, works with hundreds of other individuals that have different income levels, different portfolio levels. And, we have strategies internally that literally say, if you're making this much money, here's your buckets, here's your percentages. It's called a tax mapping strategy. So how you save determines how you retire and determines what account you spend from when you retire. So it's not just about how much you save, it's what type of account you save it in and then what type of account you spend it from. So we work a lot on the savings and the income side, right? It's income planning. It's your retirement income plan. If tax rates do this, here's what you are doing. Here's your new plan. If tax rates go the other way, here's your new plan. So have somebody on your side, have somebody on your team that knows about these tax changes, these tax laws, so that way you can stay on top of them.
Yeah, take advantage of that tax mapping strategy from the team of the McPherson Financial Group. It is a complimentary look at your taxes. And again, it's about a strategy and about a plan. 321-425-8550. Always online at artofmoneyradio.com. Do you see that a lot of people only really start thinking about taxes after the first of the year?
Yes.
Yeah.
A lot of people don't do a lot of tax planning.
Yeah.
A lot of people don't think there's much they can do, right? Since the Trump tax cuts, right, it doubled your standard deductions. So there's not, a lot of us don't itemize anymore like we used to. So the old adage of adding up receipts, adding up charitable donations, things like that don't come into as much play for most of us. So most people think, it is what it is. I can't do anything about it because it was last year. But what I just mentioned earlier, maybe you could have saved differently, right? Maybe you could have gotten a bigger write-off for this, or you don't need the write-off because you're in a low enough tax bracket. So yeah, people don't necessarily think about tax saving in the year. They think about tax saving April 15th when they owe taxes,
right,
for the last year.
But as you and Art say it all the time, taxes, we deal with it all year round. It's not just approaching April 15th.
Right. It's all year round. And, you mentioned it earlier when you said that the federal government has collected $3.5 trillion in taxes this year, but they've spent $6 trillion, right?
Right.
So they're going to have to raise taxes. It's coming from somewhere. It's funny. So, Janet Yellen is saying that Congress needs to raise the U.S. Treasury's debt ceiling to avoid catastrophe. If you put it in our perspective, right, you and I, that's like saying, I need my credit card limit increased or I'm going to run out of money.
Well, stop spending money.
Stop spending money. We don't need to raise the debt ceiling. We need to stop spending money.
Right.
Or the government's plan is to raise our taxes.
Which is going to happen eventually, regardless if they say it's not going to, but our taxes are going to go up. You've heard the phrase before, Luke, and I think you've said it before, that taxes are on sale right now. What does that mean?
Yes, taxes are on sale because we're in a historically low tax environment. Whether that means from our deductions to the tax brackets to our income limits in each bracket, historically they're low. If you go look out, if you just Google it, right? If you just go to the website, internet, and look at tax rates by decade or by presidency, whatever you want to look at, they are low right now. They're extremely low. So they are on sale. If you can streamline and expedite, I know it sounds bad, but if you say it multiple times, it may sink in. If you streamline or pay more taxes now on purpose, you're going to save more money later.
That number is 321-425-8550. And when you come in for that complimentary, no obligation consultation, that does include a tax mapping strategy, because there's a big difference between tax prep and tax planning. Man, prep, and correct me if I'm wrong, Luke McCarty, we prep for the taxes that are behind us. We plan for taxes all year long. Is that correct?
That is correct. You can say that again. You can yell it out the window as you're driving down the road.
Thanks for listening. Want more from Art McPherson of McPherson Financial Group? Find us online at artofmoneyradio.com. We are an independent financial services firm helping individuals create retirement strategies using a variety of financial and insurance products to custom suit their needs and objectives. Securities offered through World Equity Group, Inc., member FINRA and SIPC, a registered investment advisor. Investment advisory services offered through ProStatus Group, LLC. McPherson Financial Group and ProStatus Group, LLC are separate entities and are not owned or controlled by World Equity Group, Inc. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. Past performance is not a guarantee of future results. Investments can fluctuate and when redeemed may be worth more or less than when originally invested. Investment financial professionals are not licensed in all 50 states. Art McPherson is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Please consult with your attorney, accountant, and or tax advisor for advice concerning your particular circumstances. Annuity guarantees rely solely on the financial strength and claims paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Arthur McPherson. Florida Insurance License number A174. 725.
Today's show has been a work of art.